So in this evolution of rent to own, like what is happening right now in 2025?
When it comes to rent to own, I think a lot of people hear the word rent and they get sidetracked by it.
This could be a breakthrough for them as well.
The reality is a lot of people are going to get outpriced.
Exploring options like rent to own will be an ideal solution in those situations.
That's $42,000 you literally are taking out of your pocket and handing it to your landlord and saying, bye, enjoy my money.
What if I told you that owning a home in Canada without a mortgage approval isn't just possible, it's already happening for thousands of families. In a market where banks are saying no and affordability is at an all-time low, rent to own isn't just a backup plan, it's a breakthrough. But how does it really work? Who is it for, and is it too good to be true? Today on Stellar Talk Show, we are lifting the lid on one of the most misunderstood and life-changing real estate paths out there. Joining me is Rachel Oliver, co-founder of Clover Properties, award-winning entrepreneur and Canada's leading voice in rent-to-own real estate. With nearly 1,000 families helped and 15 plus years in the game, she's here to break it all down. No fluff, just facts. Text someone who's tired of renting, share this in your stories, and let's talk about real solutions, because the dream of home ownership isn't dead, it's just evolving. Hi Rachel, welcome to the show.
Thank you for having me, Stella.
Yeah, it's amazing to have you. We were talking a lot about rent to own. So tell me like how it all started.
Oh gosh, rent to own, I mean, if you dated back to the beginning, I could say it was something that started back in the 70s, where mostly in the States, people couldn't afford to buy a home, or they couldn't qualify, or a landlord was trying to get rid of a property but couldn't get the price for it, so they'd approach the tenants and say, hey, rent to own my house. And then they would come up with some agreement on the back of a napkin. And when those types of agreements come up, they're well-intentioned in some cases, but because they're not detailed and there's no structure, a lot of those rent-to-own deals didn't come to fruition. And if they did, it was probably a miracle. However, the intent behind it was very sound, even back in the 70s. And that's to help a home buyer who doesn't fit the bank criteria and needs a little bit of time to do so. So that kind of the runway is the rent-to-own process. To help them become mortgage ready to meet and satisfy the requirements of the banks. So this has been going on back since the 70s.
Oh wow, that's amazing. And so like when you talk about getting them ready, what does that really mean, Rachel? What are you influencing there?
With rent to own specifically, what we're doing is we're addressing the challenges that are stopping somebody from getting a mortgage with the bank, ideally a mortgage with the bank. And lately, as we've seen, the bank's criteria is getting more and more and more strict, because the banks are more and more risk averse. They want to make sure that the people that get into home ownership are going to keep up with their payments. They want to make sure that those people are going to essentially be a customer for the next 25 years, because that's the length of an amortization term. Amortization for a bank is lifetime value of a client. So they want to be sure that they're bringing somebody who can stay there in that home or in a home ownership context for 25 years. And that means they need to have sound income, they need to have sound financial management habits, they need to have low debt and manage their debt well. And ultimately in jobs and businesses that will continue to grow and contribute to a higher income. So that's what the banks are looking for. But we know life is expensive, life is challenging, and sometimes people don't fit the mold. But their personal circumstances require them to move out of a rental situation and create stability for their family. And that's where rent-to-own comes in. They need stability, they want a home, the bank is saying no today, well then rent-to-own could be the path.
Amazing. So like, so from 1970s to now, I probably believe it has evolved a lot from, as you've mentioned, from the back of a napkin to like a proper contract now. It's a huge journey that I would, imagine. So tell me, you've been in the industry for like over 15 years now. So what has your journey been like?
So 15 years ago, the main difference is that we were dealing with property prices in 150, 160 price point. So we were helping families get into homes that back then they couldn't qualify with the banks. So that is the constant. People are going to have constant challenges. Either it's a health setback, or it's a personal setback such as divorce, or maybe a business bankruptcy. There's always circumstances in people's lives that come up and challenge them financially, and sometimes debt piles up and credit takes a hit.
Yes.
And that's okay. That has been the constant. I think that dates back to the 50s and probably even earlier than that. But the main difference is that getting into homeownership has become more expensive. So now, instead of helping people rent-own homes that are $150,000 on the market or $180,000 on the market, we're dealing with $600,000, $700,000, and $800,000 properties.
Yes.
And what that means is that the applicants who are trying to get into the program have to jump through even more hoops than they did before.
Yes, because the numbers are bigger now.
You're right.
Yeah, that's understandable. So, so in this evolution of rent to own, like what is happening right now in 2025 with all what we have seen in the past with the interest rate, the stress on mortgages? Like, do you see not only first-time home buyers but returning buyers coming back into rent to own at this time?
So we talk to a lot of people throughout the year. We usually get about 5,000 applicants for our rent-to-own program, and I wish we could help everyone, but we're very selective in who we accept into the program. And we have seen people that we talked to 12 months ago, 18 months ago, who were on the fence, who thought that, the housing prices are going to drop by 100,000, 150,000, so they're going to sit and wait. And of course, that's their choice. Now they're coming back into the fold and coming back into the conversation. And ironically, houses did not drop by 100,000. In some cases, they maybe dropped by $20,000, $30,000. But because the interest rates are higher now, some of them are outpriced, because it's a combination of not just what the purchase price of the home is, it's also what the monthly payment is going to be.
Yes.
And I see this a lot. People say, okay, I want a $700,000 home because I can't find what my heart wants for a $600,000 home. Give me a $700,000 budget. Absolutely, no problem. And in some cases, it's warranted. If people don't have a lot of debt, we can boost their budget a little bit.
Yeah.
But then we show them what the monthly payments will be on that $700,000 property. And they're like, well, no, I want to pay for it like it was a $600,000 property. It's kind of like going to, a Tesla dealership and buying their, top of the line Tesla and saying, I want that luxury Tesla, but I want to pay Toyota prices for it each month. Can you make that happen?
Yeah.
And of course, that's unrealistic. And that's, I think, where the disappointment is. Whereas when they originally approached us, they could have gotten what they wanted for the $600,000 price tag. Now, what they want costs $700,000.
Yes.
And because the interest rates are probably going to stay steady in the 5% range if we're dealing with the banks, the price for that $700,000 home is going to be higher today than a $600,000 home a year ago.
That's true. I think that's one of the struggles that we have to overcome when we are looking into purchasing or into a rent-to-own position at this time. So tell me, Rachel, so in your viewpoints, with your experience all this time, in today's market, who's an ideal client who can benefit from rent-to-own?
So the ideal person is someone who has a great income. Incomes are key because that is going to allow them to keep up with the monthly payments on the property that they want. And it allows them to manage debt and pay it down, because a lot of people that need the rent-to-own process have some debt. And that debt is stopping the bank from saying, yes, we'll take a chance on you. You need to basically bring down that debt before the bank will say, yeah, you're a great candidate for our mortgage products. So the rent-to-own platform is essentially a structure and a very specific timeline to shrink that debt. So they have to have the income to support the monthly payments, enjoy life, and whittle down some of that debt. So that's part one. And then the other part of it, I would say, is the down payment. A lot of people talk about, 5%. You can qualify for a mortgage with 5%, and the banks just, the policies just changed, and 5% now buys you, up to $1.5 million. $1.5 million, I believe, and that's great. But when people talk about 5%, I think it's misleading because it's ambiguous. 5% of what? 5% of a $500,000 home in rent to own is $25,000. 5% of a $700,000 home is $35,000. That's a $10,000 swing. Yeah. So when people talk about saving for a down payment, ideally they should be thinking about how much money have we saved for rent to own. So the ideal candidate is someone with high income and someone who has 25, 35, 45,000 saved for a down payment. And the good news is that they don't need to worry about closing costs.
Yes.
So that gets them into the market faster as well, because closing costs in some areas can be 8, 9, 10, 12,000.
Yeah, 1 to 2% of the property value, right? Depending where you're buying, most definitely. So just to understand the module around the rent to own. So as you just mentioned, like the important part is the income. The income has to be sufficient to cover the monthly payments. The down payment, you can enter it with the minimum down payment, and there is no closing cost. Apart from the income, what else? Is there anything else that you need to have to qualify to come into the rent-to-own path?
I would say probably above all else, besides the income, besides the down payment, is the mindset and determination. Nothing is handed on a silver platter, at least nothing that's worth really having. And I find that a lot of people underestimate the amount of commitment it does take, not just to get in. Getting in, I often say, almost any monkey can help someone get into a rent-to-own process. But it's sustaining it and succeeding as a result of it. That's where the real effort is. And if you don't have the mindset, if you don't have a strong why is home ownership important to you and your family at this time, and why is it important to you 5 years from now? If you're not clear on that, it doesn't matter whether you're renting to own, it doesn't matter if you get a private mortgage, it doesn't matter if you even get a bank mortgage. You are behind the 8 ball. So mindset is number one.
No, that's absolutely right. And, planning with the strategy, right? And sticking to it. That's very important. The consistency of the plan, being top of that, making sure that you're able to carry that cost for the length of time that you're going to be on rent to own is very important as well. So tell me, based on what you have seen with the families that you have worked in the past 15 years, Rachel, you mentioned it's over 1,000 families. So how have their journeys been? What's the feedback that you're receiving?
Oh, goodness. I think the feedback can be summed up in that it's life-changing and game-changing. And, it makes us feel like, we go from zero to hero, but really the people are doing the work. We're just creating a container and guidance, and they're following the guidance and they're taking action. I was just recently talking to someone who completed our program 11 years ago.
Wow.
And what she said was, at the beginning, she had gone through a bankruptcy after a health setback, and they couldn't even rent an apartment because landlords are very picky as well, just like the banks. Everyone looks at your credit. And if you have a bad credit history, you can get denied by the landlords as well. And that was her situation. And she had 2 young children at the time, and she wanted to be in an area where there's great schools, but landlords wouldn't rent to her. So she approached us about rent to own. And to be honest, they are the most delightful family, very hardworking, great income. Her husband worked in the HVAC industry. She was actually just starting out her real estate career as an agent, and they were making decent money. And what we saw in her was determination and commitment to her own family's future. And we took her into the program. And she took ownership of her home in 2020. And after she took ownership of her home, they went on to buy 2 investment properties.
That's amazing.
And a home for her mom and dad, who live a couple of blocks away. So they help out with the kids.
That's amazing. That's definitely a stepping stone into a bigger path in your future, right? That's a great success story that you shared with us. Thank you so much for doing doing that, Rachel. But in the meantime, can you tell me, like, in today's 2025, like, when we are talking about rent to own and the cost of carrying it, how is that calculated? Can you just break it down for us a little bit so we can understand where that number's coming from?
When it comes to rent to own, I think a lot of people hear the word rent and they get sidetracked by it. They're thinking, oh, well, I'm renting for $2,500, so that $2,500 allows me to own a $700,000 home 3 or 4 years later. And I wish it worked that way. I really wish. But really, rent to own is closer to how mortgages work, because we're departing the rental game, and how rent works is not how rent to own works. Rent to own is closer to the mortgage side of the equation, because that's the goal. The goal is to get you onto the bridge away from renting and into owning. So understanding that the monthly payments are going to be closer to what a typical ownership scenario looks like, numbers wise, is really, really key. And that's really a function of understanding how mortgages work, because that's where we're headed. So the monthly payments are very similar to what a monthly mortgage would be, including, so on top of that, of course, as an owner, we have to pay property taxes, we have to pay property insurance. So when you factor in, what's the mortgage, property taxes, property insurance, that encompasses the monthly payment. Just like if you were to walk into a bank with 5% down, your closing costs, and the bank approves you. That's what your monthly payment will be. But our program is a little bit different. And it's special in the way that when you're in a rent-to-own scenario with us, a portion of your monthly payment goes back to the rent-to-owner.
As a saving.
As a savings to help them increase that initial down payment that they came in with. So if they had $30,000 to start with, through these monthly credits or monthly kickbacks, or you can call them rebates, whatever, they're getting a piece of that back. They more than double their original $30,000. And fast forward 3 years or 4 years, they're exiting the rent-to-own process with much more substantial savings for a down payment, a property that they've lived in and had peace of mind in and treated as their own for 3 or 4 years. And in that timeline, they've paid down their debt, they've improved their credit situation, and now the banks are like, pick me, I'll do a mortgage, I'll give you financing. And that's really what we're doing. So the monthly payment is very reflective of what it would cost for them if they were to get a mortgage today.
Directly with the minimum down payment. Okay, that's very clear. Thank you very much. So in other words, like when you were explaining this, what was running in my mind was anybody who needs that discipline in saving for a bigger down payment for the future, this could be a breakthrough for them as well, because now you have that kickback or the whatever that you want to call it, saving going back into your down payment, boosting that for when you're ready to take it on your own in the future. So those terms that you have, like, is it starting from 12 months and it's up to 4 or 5 years, or what are the terms looks like?
Great question. So the terms that we work with are either 36 months or 48 months. It's quite simple. It takes about 3 years for someone to be able to keep up with the payments on their debt and the payments on their property. When we first started out doing rent-to-owns, we did offer 12-month terms. We did offer 24-month terms. But as the price points of real estate increased, the monthly payments go up higher. And when people have to manage debt and higher monthly payments and cost of living, transportation, gas, daycare, you add all of that up and your monthly cost of living is much higher. So to help people save up that extra $30,000 down payment in a shorter amount of time is harder. So the months are now 36 months and 48 months, still under 5 years to get into the actual ownership position. But the day that you move in, the home is yours. And you have that peace of mind, and from your first monthly payment, you're building equity in it. That monthly kickback is your equity, the same as if it would be if you got a bank mortgage.
Yes, no, that's absolutely amazing. So, I clearly see why it has been a great option for thousands of families in Canada to break into the home ownership on an early space until they're ready to take it over on themselves. That's amazing. So tell me, when we are thinking about the next what's next for rent to own? What are your thought process there? What do you see for the future, the next 5 years?
Well, I think that a lot of people who are thinking about home ownership are all impacted by the circumstances around inventory. There is big demand from entry-level buyers, and unfortunately, we're not building any more entry-level properties. The cost of construction has increased. We've got tariffs in the mix. We have higher costs of land. So the developers are now redirecting their energy. A lot of developers are building purpose-built apartments.
That's true.
And they're getting government funding and subsidies to do so. So those policies in the government right now are impacting how first-time home buyers are going to fare out in the next 5 years because there's just not enough inventory. But the demand from first-time home buyers is always going to be constant. It always has been. For me, that's what I've observed in the last 15 years. First-time home buyers represent the biggest chunk of the buyer market.
That's true.
And they're going after those entry-level homes. And entry-level homes in Ontario are continuously shifting. 15 years ago, they were 150,000 to 220,000. 220,000 was a luxury home in Barrie. Now, entry-level homes are anywhere from 500,000 to 650,000, and then we have an upper tier of 650 to about 850. But there's not enough construction. And we've all seen that most people don't want to live in a condo. So people prefer the townhomes, people prefer the detached. I mean, everyone wants to live in a detached. So that, you can still find it, but you probably have to go further out. But if you wait too long,
that's going to go up as well.
It's going to go up as well. And then when it goes up and your income doesn't go up as rapidly, your savings don't go up as rapidly because the 5% for an $800,000 home is different than the 5% for a $600,000 home. So as we're not building more, what's there is going to go up in value. And the reality is a lot of people are going to get outpriced. Rent-to-own can't fix for that. Private mortgages can't fix for that. Alternative lenders can't fix for that. That's the one part that I wish I had a magic wand and I could fix for. But I do see that there's still hope. I do think that everything is cyclical. And if you're not able to get into the market in the next 2-3 years, whether it's through a bank, through a rent-to-own process, through private financing, I think your next opportunity will come up 5, 6, 7 years from now, where I think we might resume construction for entry-level buyers. But the square footage is going to be much smaller.
No, I know. We already see that happening, right? Yeah, most definitely. So, what I'm hearing from you is the earlier that you can enter, the better, because as you mentioned, there's not much construction going on right now at this time. And if it's going to take time and you're going to be renting all those years until that time comes, might as well start, building something yourself, like, exploring options like rent to own will be an ideal solution in those situations, right?
Yeah, exactly. Instead of wasting time renting and wasting money, more importantly, there's other ways to get into the market. And a portion of your monthly payment in rent to own goes back into your pocket versus if you're renting, all of it goes to building your landlord's wealth and your landlord's equity. And a lot of people don't realize how much that adds up to. On average, we see people spending anywhere from $36,000 a year to $42,000 a year on rent. That's $42,000 you literally are taking out of your pocket and handing it to your landlord and saying, bye, enjoy my money. And that's not building their own future for their own family. And that's the part that I think people don't want to wake up to. And if I could leave anyone with any type of advice who's in that kind of, when's a good time to buy? Well, when is a good time to pay your landlord $40,000 a year? And that's just year one. Think about it. If you wait to stay out of the real estate market for the next 3 years, 40,000 times 3, simple math.
Yeah.
$120,000
Yeah.
to the landlord.
Yeah, we're just making the landlords much more richer than they want to be.
And I don't have anything against landlords. Believe me, I understand those dynamics as well. And not everyone is cut out to own. It doesn't suit everyone's lifestyle. It doesn't suit everyone's finances. So landlords definitely have a place. But it goes back to your earlier question about what's that criteria? The mindset. If you're of the mindset that you want to have stability, you want to have control of your financial future, don't think about it a minute longer. And if you can't qualify with the banks today, go the rent-to-own route.
That's true. So what's important is I think end of the day, everybody is working so hard to build a life, to have stability, to come back to a place to call home which is affordable, where you feel secure and you see your family is growing into, right? So that's very important. So if you're someone out there, if you're renting and if you hate the fact that your homeowner is coming and knocking on your door for rental payments, or having these restrictions on you, or having the consistent thought of having to move from place to place, changing schools for your kids, leaving behind precious memories, then this is definitely an avenue for you to check out, because this will give the foundation for you to start now to build a better future for tomorrow for yourself and also for your family. Richard, I want to ask you a couple of questions based on the conversations that I'm having with people when I'm talking to them as a realtor. So some of the questions are how does this work if based on different family situations and personal situations? So if somebody has been an homeowner before, for some reason now they are not and they're back to renting, are they able to enter this program as well?
Yeah, absolutely. So we often talk about first-time home buyers, and that's the majority of the people that we work with, because they just represent the bigger chunk of the market. But what we're seeing more and more of is previous owners who had to downsize. At the end of the day, personal setbacks can get the best of us, and debt is, that unnecessary evil that comes with a personal setback. And when you're a homeowner, one of the easiest ways to get rid of that debt, it's not to file for a consumer proposal or a bankruptcy, because those are so hard to bounce back from credit-wise. Yeah, it clears your debt, but your credit is injured for 7 years. When you're a homeowner and you have equity in your home and mortgage pay down, you can use that to quickly extinguish the burning debt that is eating you up, because the collection agency's calling, that's stressful. The bills coming in saying past due, overdue, and then when you apply for a measly Walmart card and you get declined, all of that is a massive stressor. So people who own homes, their quick fix is to sell out the house, clear the debt, and oftentimes they think they just have to rent and start from scratch while they're renting. But this is where the rent-to-own path can actually help them rebound faster.
Yes.
So instead of downsizing and going to renting, downsize to a rent-to-own. So you still have the stability from day one. You still get money back in your pocket with every single monthly payment, like you did when you were building equity as a homeowner. And you are going to be able to recuperate from this financial setback much faster, because behind the scenes we have a team of experts that is dedicated to helping people exactly like that bounce back from whatever caused them to have those issues in the first place.
That's amazing.
We don't know everything about money. I know sometimes I need to talk to experts about certain aspects of debt management, credit management. I've been there myself. So talking to experts who have their hand on the pulse, it sometimes can be intimidating. But once you get over that hurdle and you're like, oh my God, the amount of information that's saving me time, saving me stress, it can be a game changer. So yes, we help a lot of downsizers.
Yeah, it may not be the cup of tea for everybody, but the people who actually need that extra boost and the time to restructure themselves, rebuild themselves, definitely an avenue to explore. And also, Rachel, thank you very much for bringing this book for me today. I really appreciate that, a signed copy from Rachel Oliver. So this Rent-to-Own Essential Guide for Home Buyers, what is this book all about? What are the benefits of this, and why should people out there should be reading this?
So we wrote this book I would say about 10 years ago, when we realized that there's a lot of misinformation and miseducation around the topic of rent to own. So we decided to hit pen to paper and provide the good, the bad, and the ugly on what rent to own is and what it isn't. And this book is available on Amazon.ca. It has helped a lot of people understand if rent to own is the right path for them, because obviously we can't get into all the nitty gritty in this conversation. But if someone is interested in getting a copy of it, we make it available on our website. They can grab a free ebook at stoprentingtoday.ca.
That's amazing. And we're going to leave that link in our comments and in the bio below as well. And it's an Amazon bestseller. Wow, that's amazing, Rachel. That's a big achievement there. So please try check this out, and let us know if you have any questions. If you want to continue the conversation, Rachel's contact information will be also there as well. Rachel, thank you very much for exploring this subject with me and sharing the success story. It has been really, really wonderful having you on the talk show. We're going to leave your information on the comments below, so the people can reach out to you directly as well if they have any questions. But thank you very much for coming in and sharing rent-to-own strategies and what benefits that has for all the audience who's listening to us today. What an eye-opening conversation with Rachel Oliver, from breaking down how rent-to-own works to the real families it's helping across Ontario. This episode proves one thing loud and clear. Owning a home in 2025 may not look like it used to be, and that's exactly why more people need to hear this. Now it's your turn. Let's keep the conversation going. Do you think rent-to-own could help close the home ownership gap that we are experiencing now, or would you consider it for yourself or someone you love? Have a story or an opinion? Drop it in the comments or DM us. Tag a friend who's renting and feeling stuck. Share this episode to your story and text it to someone who's ready to build a future but doesn't know where to start. And don't forget, subscribe so you never miss the conversations that matter most in real estate, finance, and life. Because this show is not just about buying homes, it's about building legacies. This is Inspiring Lives, where real talk leads to real change. Until next time, stay bold, stay informed, and keep moving towards the life you deserve. Thank you for spending your time with us on the Stellar Talk Show. We hope you found value in today's episode and gained insights to help elevate your lifestyle. If you enjoyed the discussion, please like, subscribe, and share it with anyone who could benefit. It means the world to us. Until our next episode, stay inspired, and I'll see you soon on our next Stellar Talk Show.